Good afternoon, everyone. This is Christy with Ahn Co. It's Friday, April 26th. I'm going to go over the markets for the day and week with you. Corn continued its reversal from yesterday. Yesterday trading down 4 cents, closing up over a penny on the day, and you saw that kind of trying to continue into today, up 3 3/4 on the day. At one point, you were up about 5.5 cents, but still close positive nonetheless. When you look at the big picture, though, overall on the week, still down 7 1/4 cents. So a lot of pressure early on, and that was the name of the game across the board for grain and meat markets this week. There was a lot of red when you looked at it. Soybeans actually found a new contract low for the May soybean contract, and you saw a bit of pressure show up there, even though you've had some friendly news out there that President Trump does think that a deal will be signed soon. You were in kind of the tail end of everything. You are over there in Beijing now, and then you were coming back over to Washington here next week, but you still had the pressure nonetheless. Soybeans down 5.5 cents today, down 26 3/4 on the week, so a lot of pressure there. Wheat market really tried to stay on the positive note, but couldn't for Kansas City and Minneapolis today. Minneapolis down anywhere from 2 to 7 cents, while Kansas City was down 4.5. Chicago wheat just hung on, up 1/4 cent on the week. Chicago was down 9 1/4, where you had a lot of pressure into Kansas City and Minneapolis. Minneapolis down 25 1/4, and Kansas City just over 20 cents lower. When you go over to the meat markets, you saw a bit of pressure there as well. When you look at a weekly chart, it wasn't really that big of a deal, but those deferred contracts are where it really showed up. So on the day, live cattle down 32.5 cents. The weekly chart shows a slight positive, but when you look at those deferred ones for June, actually down $7.62.5. When you move over to feeder cattle, down 40 cents on the day. Its August contract was down $7.82.5 on the week, and then when you look at hog market, down just over $1 today, and your June contract there was down $8 on the week. So a lot of pressure into those deferred contracts. It does look like you have managed money continue to liquidate the grain markets, then try and flip some of their longer positions. You could be seeing managed money do that as well in the outside markets. They are getting aggressively long when you look at energies, and crude oil was down almost $3 at one point today, being closer to $2 lower by the end of the day. And that's really where it's going to be at for the week, as you were really steady beyond that. One driving force this week could have been U.S. dollar as well. U.S. dollar was up over 50 cents on the week. That is making our export sales more expensive for foreign nations, and that's really hurting our demand. Exports this week were within the range of expectations, but they were nothing great, and that is disappointing, as we do need demand to pick up. We are coming into a trend now where the Sunday night weather models are going to be a huge deal. So we'll be watching those Sunday night models to see, and that's probably how you're going to have these markets trade off, as they pushed a lot of moisture for the big I states, and they really need to be planting right now, as this is their ideal time frame to be planting, and they are going to get a lot of moisture. So we'll be watching that over the weekend and seeing what these extended forecasts look Sunday night. I have to close with the disclaimer: trading in futures and options involves risk loss and is not suitable for all producers. This is a solicitation. Have a great weekend.